Well, this month we're going to be summarizing the most challenging market we have had in over 30 years. And what is your opinion? Is it doom and gloom? Let's have a closer look with some predictions that I plan to make with this month's update. So let's get started. Spring finally arrived, although judging by the temperatures, Mother Nature seems to have skipped right past spring and gone straight into the summer. And of course, as the weather heats up, so did activity in the Greater Toronto Area housing market. After spending much of the past year working through an oversupply of listings, the market showed some encouraging signs of life in May. More homes sold, fewer new listings came to market, and buyers who had been patiently waiting on the sidelines are beginning to re-enter the game. In May, 6,583 homes sold across the GTA, a 6.3% increase compared to the same month last year. At the same time, of course, available listings declined by 13.3%. That combination is important because it signals that inventory is finally being absorbed at a meaningful pace. The trend became even more apparent compared to April. Sales jumped 10% month over month while new listings edged lower. Put simply, buyer demand is growing faster and new supply is entering into the market. And if this pattern continues through the summer and into the fall, don't be surprised to see conditions become noticeably more competitive by the end of this year. And of course, one of the biggest drivers behind the market's renewed momentum is what we call affordability. Home prices remain below last year's levels, while lower borrowing costs have improved purchasing power for many buyers. For the first time in quite a while, many households are finding themselves able to comfortably qualify for homes that just felt out of reach just a year ago. The average GT home sold for $1,069,700 in May, down 4.6% year over year. However, average prices increased on a month-over-month basis, which may be one of the earliest indicators that prices are beginning to stabilize. My expectation, here's my prediction, is that we will continue to see relatively flat pricing through much of the summer, followed by the modest appreciation as we move into the fall market. If interest rates continue to trend downward or remain the same, economic confidence may improve. I believe many of today's hesitant buyers could become tomorrow's active buyers. Historically, markets don't stay balanced for long. Once confidence returns, momentum tends to build quickly. In fact, one prediction I'm watching closely is a potential surge of pent-up demand entering the market in late 2026 and early 2027. There are thousands of buyers who have spent the last 2 years waiting for the perfect moment. That reality is that by the time the headlines confirm the market has recovered, much of that opportunity will likely have already passed. The condominium sector, on the other hand, continues to face its unique challenges. A wave of newly completed units has kept downward pressure on condo prices across much of the GTA. However, there are signs that buyers are beginning to recognize the value of opportunities that are becoming available. Condo sales rose nearly 8% compared to last year, suggesting improving affordability and lower borrowing costs are attracting purchasers back into the market. So my prediction for the condominium market, of course, is that it will likely recover more gradually than the detached market, but many of today's condo purchases could look very smart 3 to 5 years from now. Investors who focus on cash flow and long-term appreciation may find some of the best opportunities we've seen in years. So you ask me, what does all of this mean? For buyers, the current market still offers something we have not seen much over the last decade, which is what we call choice. There's available inventory right now, negotiating power remains on your side, and there is still time to make thoughtful decisions about feeling like you need to submit an offer before you've even found the front door. For sellers, the outlook is still steadily improving, demand is strengthening, inventory levels are shrinking, and buyer confidence is returning. Now, let's be clear, of course, while we're not back in the frenzy of 2021, and frankly, that's probably a good thing, the market appears to be laying the foundation for a healthier and more sustainable period of growth. If, of course, the current trends continue, I expect that 2026 could be remembered as the year the GTA quietly found its footing again, and 2027 potentially delivering stronger price growth than many are currently forecasting. As always, every neighborhood tells a different story and every property has its own audience. And if you are curious about how these market trends affect your home's value or your plans for buying and selling, I'd be happy to have a conversation with you. Until next month, enjoy the sunshine, enjoy the patios, and remember, in real estate, just like the weather, conditions can change quickly. The smart money usually arrives before the forecast does. See you next month.